Hello traders, in this video I'm going to show you the easiest trading strategies that you can use in 2024 and 2025 and moving forward. And this trading strategy will help you to pass your problems very easily, and we are going to cover even the sniper entries. Okay, so let's move on and start with the video. In this video we are going to learn the structure that we are going to use, the bullish and the bearish one, the structure using the higher time frame to lower time frame for entries, how to draw supply and demand zones, how to refine drawing the supply and demand zones, fair value gaps, more of fair value gaps, how to make a confirmation, and how to make sniper entries. And also we are going to cover the secrets of choosing the prop firm, how to choose the right prop firm with proper reviews, discounts on new challenges, and comparisons on prop firms, plus more. So you have to stay tuned throughout the video so that you can understand even more. And also we are going to provide examples with detailed explanations using what we have learned from the higher time frame to the lower time frame for entries, and also we are going to provide some sniper entries throughout the video. So let's begin, because we already covered the timeline that we are going to cover in this video. So if you're interested, please watch the video till the end so that we can at least build this trading strategy together. The first thing that you need to cover is the structure. This is the bullish structure. For the reversal one, you need to find at least price has to trade above this high to make a new higher high. So we will be looking to enter long around this area. So for reversals, it's the same thing. You have to make sure that the market is moving to the upside. Then you will be looking to enter longs around these areas here. So from here, that means you'll be looking to enter longs here, but also make sure that price has to break some lows, the internal lows here. You will have some internal lows around this area here. That is why you can even see that we have the first internal low here, the second one. Then you'll be looking to enter long around this area for the market to move to the upside. Okay, so that's all that we need to cover from the bullish side point of view. So let's move on to the bearish side. It's still the same thing, but everything just look the same. So from here you can see that we have our higher low, our high, higher high, higher high, higher low. You can see literally that this higher low was broken. The market did not make a new higher high like this. Okay, so the market eventually broke this low here, and then on the correction, this is where we will be looking to sell around this area. And also in the continuation market, you will be looking to sell near this previous lower high around this area here. Okay, that's all that you need to understand. This is just the basic structure that you need to understand. So that's all. But before we move on, let me show you at least the reversal using the higher time frame and the lower time frame. So here we can see that we have a lower high around this area, and then we have a new lower low. We have a new lower low because price has already broken this previous higher low. So that means the market is not likely to reverse to the upside. So in the lower time frame around this area, you have to find the structure. It's still the same thing, but in a bigger picture around this area here. You can see that we have the same thing, but this time the market is a little bit complicated around this area here. So if you are not looking to enter short around here and around here and around here, you can still find at least a break of market structure here and then look to go short here. I'll also show you some confirmations when we move forward with this video. We have 3 ways to draw supply and demand zones. I will explain each one of them. We have, as you can see on the demand zone, we'll start with the demand zone. On the demand zone, we will be looking to go long around this area. Here we'll be looking to go long around this area. Even here we'll be looking to go long. But then how do we draw the supply and demand zone? On the demand zone, you can see this. We have this bullish candle, and then we have this bearish candle. Here we can see that we only have one bearish momentum on the market. So that means we will start by drawing the zone from this high and then to the low, and we can clearly see that we have this bullish candlestick here. The bullish candlestick has a lower low than the bearish candlestick. So that means we start from this high, we start from here, and then to the candlestick that is having a lower low. This is the end. Okay, we will end around this area. Same applies to this area. We start from here, we start from the high of the bearish candlestick and then to the low of either the bearish candlestick or the bullish candlestick. But we can clearly see that in this side here we have only the bearish candlestick that is having a lower low. So that means we will end by drawing the zone around here. And sometimes on the demand zone number 2, we can see that we have 2 bearish candles. So that means we will start around this high here here and end with the candlestick that is having a lower low. Clearly we can see that this bearish candlestick is the one with a lower low, not this one here. So that is how we draw our supply and demand zone. So let's move on with the supply zones. On supply zones, we will be looking to enter short around these areas. Here we will be looking for the market to shoot to the downside. Even here we'll be looking for the market to shoot to the downside, and even on the supply zone number 3 we'll be looking for the market to shoot to the downside. It's the same thing as the demand zone, but this one is just vice versa. Let's look. We start from here on the bullish candlestick now, and then we have to find the candlestick that is having a higher high. We can see the bearish candlestick doesn't have a higher high. The bullish candlestick doesn't have a higher high, but then the bearish candlestick is the one with the higher high. So that means we end by drawing the zone around this area. So that means when price is shooting around this area here is where we will be looking to enter short. And we can clearly see that here we only have one candlestick, the bullish candlestick only. Here we have like 4 candlesticks. You see this candlestick here is the one that resets the drawing of the supply zone, because here we can clearly see that we only have a bullish candlestick, then we have this bearish candlestick, and then we have this bullish candlesticks. So from here, that means this one is the reset candlestick. If I may say, you can just say it whatever you want because we don't want to complicate things. From here we can clearly see that we only have bullish candlestick, and then suddenly we have this move to the downside. So from here, that means we will start the zone from here to here. Then when price reaches this area, this is the area where we will be looking to go short, and then for price to shoot to the downside. Same applies from here. You can see we have 1, 2, 3. The candlestick that is having a higher high is the bullish candlestick, then followed by this bearish momentum. Okay, so from here guys, that means you will be waiting for the market to come around this area to sell, around this area to sell. But when we move forward, I'll show you how to make those sniper entries and how to make a confirmation candle. So for now, let's refine these entries, the supply and demand zones. We can see this is the before, this is the after. But from here, as I said before, this is the starting point, this is starting point. Okay, then this is the end point. Let me say end price also, because we are talking about prices here. So if you want to refine this zone, that means we will take this level that we have starting, the starting point, we will put it on the last candles open. So that means right now we will put our zone around this area. So that means we won't be waiting for the market to come here, but we'll be looking for the market to come at least to this area, and then we will look for the market to shoot to the downside. And then from here we can clearly see that we use only the last candles. And also guys, you have to remember the starting point is around here. This is the start point, starting price, I mean to say. This is the starting price, this is the end. The end doesn't change when drawing the zones. Okay, so let's move on to the next one. This one is the same thing again, but here we have 2 candlesticks. So how do we refine this one? So that means we use only the last candlestick. The zone will start around here. So when the market comes, we won't be looking to enter longs here. So that means we'll be looking to enter longs around this area so that the market can shoot to the upside. That is why we used the last candlestick. Okay, that's how like we refine the zones. It's pretty much easy if you like you go and backtest them. So let's move on to the fair value gaps. Fair value gaps in simple terms is just the space between wicks. Don't overcomplicate things. It's just the space between wicks. As you can see, we have this low here and then we have this high here, but then in between this wicks doesn't touch each other here. Like for example, you can see this wicks here, they are overlapping, if I may say. They are overlapping, but in between here we have a space. In between here we have a space. This is the fair value gap. So meaning price is likely to come and then close this gap here and then shoot to the downside. Same thing applies from here. The market is likely to come and then close this gap so that the market can shoot to the upside. So meaning we won't have these spaces in between. Okay, that's how it is. So let me show you a practical example so that you can understand clearly. We have a space in between here, you can clearly see, and then we also have a space in between here. We also have a space in between here. But then you see this candlestick here, it came and closed this gap here. This candlestick here, it came and closed this gap around this area. So that means even this one here, we can see that price came and closed this gap here. Same applies to this area. Even though my lines are not straight, then that means you'll be looking for the market to go lower after closing this gap, But sometimes the market doesn't even close those gaps. You will see those examples when we move forward with this video. So let's move forward. So because we have already covered the structure, the fair value gap, and how to draw the supply and demand zones, in this section we are going to cover how to make confirmations. So from here we can see that we have the demand zone. Price has to come like this and then touch the zone and then close. You see this bullish candlestick close here. Price has to touch the zone first and then close with a bullish candlestick. And also price must not do something like this. This one will be wrong because price traded below the demand zone and close bullish. So that means we will avoid this kind of behavior. But we can clearly see that the market did not touch the demand zone. Why? It's because the starting point of the demand zone started here. This is the starting point again. This is the end point because we have only the bullish candlestick with the lower low. So from here, if we didn't refine the zone, that means price came to the zone, close with the bullish candlestick, and then that is why you can see the market moving to the upside. But clearly we can see that if we enter the market around this area here, entry, so that means our stop loss will be here. Let's say maybe we are targeting something like this. You can clearly see that this trade is like 1 is to maybe 2.1 or maybe 1 is to 1.5, which is very low using the risk to reward tool, because if you keep doing something like this, it will probably blow your account in the future. But then let's move on. We can see from this area here we have the supply zone. All the gaps, the gap here was closed by this candlestick, then the market shoot to the upside. This first candlestick here, this one here, is the one that touched the zone and then closed with a bearish candlestick. In this case, that means our stop loss will be around here and then we will sell to the downside. But because I want to show you some of the sniper entries, you will understand how to make sniper entries to enter around here and here. You just have to keep watching. You have to be patient. And then from this side, we can see that if we have refined the zone, so price is likely not to come to the zone, the market just shoot to the downside aggressive. But this one is a little bit of a high risk, even though price came into our favor. So meaning our entry will be, let's say around here, entry, then stop loss above. Maybe let's say you are targeting around this area. This is like 1 is to maybe 3. Then you can clearly see that the market broke this low and shoot to the downside very aggressively. Mostly you'll see this setups maybe during news event or something like that. But then this was just an example. Let's move forward. Here we are going to talk how to make confirmations again. We can see that we have a fair value gap and another fair value gap around this area. We have two fair value gaps. You can clearly see that price traded above this high to close this fair value gaps here, and then price didn't touch the zone until this candlestick. It touched the zone with this candlestick, and then the next candlestick closed a bearish. But you won't enter here because your stop loss is here. That's a little bit of a high risk, if I may say. So to be honest, I won't even enter this kind of trade. So we will just move on and skip this one for now. Another one is here. We have the fair value gap around this area, and this is the first zone. You can clearly see that price touched the zone, closed with a bullish candlestick. Your stop loss will be around here. But then, as we can see, price stopped us out. So that means on the first trade, yes, you might likely be in a loss, but then you still have the second zone with a fair value gap in between here. So most of the time when you see two fair value gaps, like from here we have the first one, we have the second one around here, mostly price is likely to come to the second one, or maybe you can just focus on the second one most of the time just to avoid so many mistakes. So from here you can see that the market touched the zone and then closed with a bullish candlestick. But let's say right now you see this line, the red line here. This is where maybe let's say you want to refine the zone. You'll be waiting for the market to touch the red line on this first zone here, but then price made a bearish candlestick, and then on the next candlestick price broke this low and then closed with a bullish candlestick. So that means you're going to avoid those kind of trades, even though the market shoot to the upside. So you can see that refining the zone, sometimes you will miss a lot of trades, but if you don't refine them, that means you will enter the market too early. So from here you can see that even on the second zone, if we refine it, price did not touch the zone. But if we didn't refine it, price touched the zone and then closed with a bullish candlestick. So that means you'll enter long with this candlestick and then put your stop loss below and let the market ride to the upside. Even from here we have the demand zone, we have this refined zone which will end around this area. Price came to the zone, the unrefined one, and then was bullish. But if you have refined the zone, that means the market did not touch the demand zone that was refined. I hope you understand me on that one. So let's move forward. As I said before, we have this market here is going down here and then it shoot to the upside, and then you have the zone, and then you have this fair value gap around this area. So that means you are waiting for the market to make a bullish candlestick that does not trade below this low here. Okay, so if anything trades below this low and then close bullish, that means you should avoid those countries. Like here, it traded below, and then I believe it should to the upside, because I'm basing this example on something that I have seen before. But if you have watched the previous videos, you will know how to understand how to enter the market around these areas. So let's move forward. We have this area here. This is how to make sniper entries. You have a fair value gap around this area. You can also say that we have a break of market structure here, or even here we have a fair value gap here. You are waiting for the market to touch the zone and close with the bearish candlestick. Let's say right now you see the market like this. The market made this here. The first sell point is around this area. This is the sell limit order around this area, sell limit. The second one will be here, sell limit order, and then you can also see another one here. The stop loss will be here. So let's see how the market moved after making this behavior here. And also you can see that price touched the zone with this candlestick and also touched the market the zone with this candlestick here. Then that means you have to wait for a bearish candlestick close, which is this one here. So let's see how the market behaved after making this bearish candlestick. You can clearly see that the market here touched this area here. Your stop loss will be above here. This is how you should always make your stop losses. And also you can also just try to treat this one pattern alone. Like for example, we have this zone here. Let me try to make my lines very clear. Around here, I believe, even though the market touched with this zone, with this candlestick here, that means if you are entering like this, the market left you to the upside. Let's do another one. We can clearly see that we have fair value gap here, another fair value gap around this area. So around this area, we can clearly see that we have the market touching the zone with this candlestick, and then on the next candlestick, the market did not close with a bearish candlestick, but then on the third one, the market was with a bearish candlestick. So that means we have to wait if you want to sniper the entries around here, sell limit here, and then sell limit here, and then stop loss above around this area. So let's see how the market behaved. You can see that on the next candlestick, the market touched the zone here, the line that we have predicted around this area, a stop loss here. So you can see that we have an entry and then a stop loss. This is your risk, this is your reward. This is like 1:17. So let's move forward with the time frame so that we can finish up this video very quickly. We have the weekly, daily, 4 hours, 2 hours, 1 hour, and then 30 minutes. This is your higher time frame, this is the lower time frame. If you make your analysis on the weekly, this is your lower time frame. Daily, 1 hour, 45 minutes and 30 minutes. 4 hours, 45 minutes, 30, 15 minutes. 2 hours, 30, 15 and 5 minutes. 1 hour, 15, 5 minutes. 30 minutes, 5 minutes and 1 minute. You can still pause the video so that you can at least take a screenshot so that you can keep them. So let's analyze something from the daily time frame moving forward to the lower time frame. This is your analysis in the higher time frame. We have this low that was taken, we have this low that was taken too, and then we have this high here. So once price make this, so in the lower time frame, that means you'll be looking to go long around this area to shoot to the upside. So let's see how the lower time frame will behave, and then your stop loss will be around this area, and the zone, guys, will end here. So this is the lower time frame. The market slightly came to this area here, but then you see this candlestick here. I have made a video about it. You can still enter long when this candlestick closes here, and then put your stop loss below. So let's see how the market behaved. You can clearly see that the market shoot to the upside very aggressively in the 30 minutes time frame. So let's move forward with the prop firm that I wanted to show you. Let's move forward on how to choose your next prop firm. Prop firm match is an absolute gold for new traders or traders who are new into the prop firm industry. So if you want to review your prop firm, you can still use this platform here because it has some amazing features that I'm going to show you so that you can at least discover your next prop firm that suits your trading style. Here we can see that we can have a comparison or maybe a list of what you are trading. Let's say right now you want to trade Forex account. You want to trade only the Forex, and then let's say maybe you want to take a 10K account with a 2-step. Then once you search here, you'll find them, and some of them you'll find some discounts here so that you can be able to find the prop firm that suits your budget. And also we have some advanced features here so that you can be able to adjust them to your liking. Let's say if you want a 50K account with a 10% max drawdown maybe, then this website will give you a list of those prop firms that aligns with your search history. And also another thing is that you can also come to the offers section and check out the prop firms that have an exclusive offers. Here's a list. You can also come into the extra account promos and find the prop firms that gives you another account when you are ready to make your first payout. And also you can check out the best sellers of the prop firms. You can see we have a list of these prop firms that are all best sellers. You can even find the prop firm that trades the cryptocurrency. Here we have 3 of them, and the futures, because I have seen a lot of people leaving Forex for futures. Here you have a list of them. And also on this advanced feature, you can still find the prop firm that is having a regulated broker like Think Markets, and also the platform like MT4, and also the country, and then you'll find those prop firms. But here you can see that it's not available. And also you can see the reviews of other prop firms, so that you can have at least something to see before you can buy a prop firm challenge. At least you can see something before you can buy a prop firm challenge. Here in the reviews section, you can see we have 71 reviews on FTMO, but we can still adjust this thing here and find reviews on other prop firms. Here we can still click and see the certified reviews on other traders. You can see this guy made a payout of $400 and a profit split of $501. You can see there's a lot of reviews here. And also you can check out the unlisted firms. Here on the unlisted firms, you can see the unlisted firms here, and also you can check the delisted and the warnings. We all know the story about True Forex funds. You can also check it out here. We can also check out the payout time tracker. Here you'll find a review of all the prop firms with their payout time. And also another thing that I want to mention is that every time when you buy a challenge throughout this website here, every time when you buy a challenge using this website here, also find the link in the description below to get your loyalty points. Here you can see that you have your loyalty points here. Once you buy a challenge throughout this website here, you'll get some loyalty points which can be redeemed for another challenge or discounts when buying another challenge from a different prop firm. And also here you can still see a list of prices, account sizes, profit split, and targets using this platform here. You can also compare the rules using this prop firm match. Prop firm match is an absolute gold for traders to review their prop firms. So in this section of the video, I want to show you and demonstrate how to use prop firm match so that it can help you to find your next prop firm. So here on this platform here, you can compare certain prop firm companies. For example, here, let's say I want to purchase a Forex trading account, a 10K challenge with a 2-step plus a discount here. I'll click on search. Here you can see I have a list of prop firms that I can purchase here. And from here you can see that we have the prices, and then you will choose the one that fits your budget. Then we have the account sizes, profit split, profit target, max daily loss, max total drawdown, daily drawdown, reset types, commission per lot size, profit target, payout frequency, and then where the company was established, and the date and the month and the year. And also here we can see that once you purchase a prop firm challenge using this website here, you'll get some loyalty points which can be redeemed for a new challenge. And also you can get some discounts when purchasing from this website. And obviously when you purchase from this website, it will redirect you to the original website of the certain company that you want to buy a prop firm from. And also once you click here, you can still see a list of everything of the challenge that you want to take using the company name. And also you can still have some offers here. You can still see that we have some offers, discounts, and so forth. We also have extra promos here. You can still see reviews on the prop firms that you are trying to purchase, so that you can have an idea on which prop firm you want to take. You can see we have a list of this. Let's click on FTMO and see. You can see we see a lot of payouts here. You can still see this Claudio made a profit split of 3,920, and there's a lot here, so that you can review your prop firm. And also another thing is that you can still find unlisted firms here. Here's a list of unlisted firms, and then delisted and warnings. We all know the story about True Forex funds. Here you'll find a list on what happened. You can also check out the payout time tracker. Here you will find a list of how many days does a prop firm make a payout in this section. And there's some advanced features from this. Let's say right now, for now I'm removing this thing. I want to take out the futures with 10K, 2 steps, and then more advanced features. You can still see that I have a lot of options so that I can choose which prop firm I want to take. Let's just click on Forex for now. You can see that if we have a list of this here, then Then here you can find a list of everything, the features, maybe the broker here, let's say Think Markets with an MT4 and MT5. With MT4 it's not available, but with MT5 it's available as Blue Guardian. So you see that you have an option to choose when you want to take a Profirm challenge. And then you can also compare the rules. You can also check out the Profirm rules, FTMO, the rules are here. You'll find the link in the description below so that you can read everything here if you are interested in one of these Profirms. And also you will find your points around here. Then when you claim, guys, also make sure that you fill up this information here, everything, and then you fill up this information here so that you can redeem. Also, don't forget to use my code so that you can redeem this code. If you don't use my code, it won't work. And then another thing is that you can still join the prop talk from this platform so that you can have an idea on which one. If you have any questions, you can still come in here and then ask them, then you'll be answered. And then for those who want to just test out the prop firm without even buying the platform, you can still find all the prop firms that have demo accounts in here. So what I mean is that you just have to use the link in the description below so that you can, at least when you purchase your next prop firm challenge, you can use the link in the description below so that you can have some discounts and gain some loyalty points. So that was the plug for me. So let's continue with the video. So because right now you have at least a knowledge on how to choose a prop firm, let's move forward with the next example here, which is the example 1. In details, I'll explain everything step by step. Here we have a bullish trend, and then the market is coming to this zone here. Then this is the area where you should be looking to go long. But then sometimes price, this is the refined zone, because already know that the zone start from this area with this candlestick here, but then we have refined it to this area, and you can clearly see that this candlestick is the one that touched the zone. Then this is your confirmation candlestick. That is why you see price moving to the upside. Even though, let's say maybe you have missed this one, you can still enter with this one here. Even on this area here, we can see that we have the same structure as this one. Stop loss around this area. Even though we have refined it here, price came to the zone and then closed with a bullish candlestick. Stop loss will be around here, and then that's why you see the market moving to the upside. And then for take profit, guys, always use target this highs here, target this highs here, this high. Let's move forward with the next example here. From here you see these two candlesticks here, and this one and the third one. This is just a bearish trend. You see this candlestick here, this is just a move to the upside. This is just a break of market structure here. So that means you'll be looking to enter longs around this area here for the market to shoot to the upside. And then remember, the zone starts here and end here, but we can still refine it to this area. So anything that comes here, you have to wait for the market to at least touch the zone and close bullish. Okay, so we can clearly see from this candlestick here, the market came, entered the zone and closed with the bullish candlestick. The buy limit can still be here or here. Okay, this is the first buy limit. This is the second buy limit. Stop loss below. Then you'll wait for the market to shoot to the upside. That's the first example. I hope you understand it clearly, guys. Let's move to the second example for sniper entry areas. But sometimes the market does not give you the same thing as always. We can see from here we have this bearish candlesticks, and then we have this bullish candlesticks. This is just a zone here. The market came here close with a bullish candlestick. That's why you see a move to the upside. Even from here we can clearly see that we have the zone that we have drawn from this bullish candlestick here, because we only have two. We have this one and then the second one here, and then we have a high, and then we have this zone here. That is why you see the market coming to this area and then coming to this area and move to the upside. And then we have this one here, it came to another zone here, and we have a fair value gap around this area. Then the market shoot to the downside, and also a smaller one here with a sniper entry around this area. Stop loss here, take profit around maybe, and also we have another one here. If you go and backtest, this will be pretty much easier, because we also have to find always the confirmation candlestick. Let's move forward. We have example number 4 here. The market came here twice. We have a slightly fair value gap here. Market came to this area, close with the bearish candlestick, and then it retested the open of the bearish candlestick, and then you can still enter there. Or maybe if it came for the second time, you can still retry the same thing, or maybe put your sell limit around this area. That is why you see the market shooting to the downside. Even on this area here, we can see that the zone start from here, it ends from here. If we refine it, we'll use this last bearish candlestick. Then the market came with this bullish candlestick close on the demand zone. and then closed bullish. Okay, then you can put your buy limit order on the open of the bullish candlestick and let the market shoot to the upside. You can tag it here as your TP1, or maybe tag it here as your TP2. Okay, let's move forward. From here we can see that we have this zone here. This is the supply zone, this is the refined zone. You can clearly see that the market did not come to the zone, even though we have this fair value gap. Here we can clearly see that we have the zone that is that starting from here, it ends here. Price came to the zone, this is the fair value gap, and then it closed with the bullish candlestick. So that means you'll target this high here. You enter stop loss here, stop loss TP around here. This is the second example. The market came to the zone, test the zone with this candlestick here, with this candlestick here, and then closed bearish. So that means if you don't want to sell around here, you can still put your sell limit order around here, sell limit, and then put your stop loss here. And also another thing, sometimes the market, even though I know some of you will try to sell based on this, but then even myself, if I'm in a trade like this, obviously my stop loss will be very smaller. So that means even if I take a loss, it has to be at least small. If it's big, that means you are doing something wrong. So let's move forward with the next example. We have this chart over here. We have the structure, we have the line chart. You see these wicks here, they won't be even visible. Let me show you something. This is the high, this is the high. On the line chart, we can see that we have this high, but on a candlestick chart, we don't have a higher high here. Do you see a higher high? No. Even this low here, it's not even that visible here, but these lows here are very visible. So from here, we can clearly see that the market came to the zone, it's the fair value gap, came to the zone like this, broke this low of the demand zone, and then closed bullish. I guess this one, I won't even try to enter it if you don't have any knowledge about this thing here. For now, you just have to at least wait for the market to give you a proper confirmation candlestick. Other than that, just wait, guys. Please just wait, or else the market will just bully you. Even from here, let me show you something. We have this zone here. The market shoot above this supply zone here and then closed bearish, but then the market shoot to the upside. If you try to put your sell limit order around here, that's all on you. You have to understand that. Even here around this area, we have this zone here. Price came like this and then closed with this bullish candlestick. That does not trade below this demand zone here. That's why you see the market moving to the upside. So that is why we need a confirmation candlestick, so that we can at least do something better with our trade analysis. So let's move on with this example 7. Sometimes the market will always give you some entries that you are going to miss a lot, I have to say. You can see that even though we have the zone like this, the market test the zone again with the bullish candlestick, and then closed with the bearish candlestick. So even if you are waiting for the market to give you a retracement like this, or a retracement like this, or a sniper entry like this, the market did not give you that, even though the market was shooting to the downside very aggressively. So sometimes if you are waiting for the market to give you a proper sniper entry, it won't happen every time. That's what I'm gonna say to you guys. So let's move forward. Here on example number 8, we can see that we have price here, we have a break of market structure, and then we have this low here, we have this low. As I have mentioned before, you have to see price at least breaking some kind of lows, especially this wicks here, and then close the fair value gap, come to the demand zone, and then close with a bullish candlestick. But then from here, we can see that we have everything that is aligning with our strategy. But then we can see that we have this first bullish candlestick close after price has touched the zone. The zone is like this. The zone is like this. Like this. It's like this. This is the area of the zone. But then we have this as your confirmation candle. But then price traded below this low here. Again, let's say maybe you enter the trade around this area, or maybe you're using a buy limit order, buy limit, and then your stop loss will be here. Then price suddenly stops you out and then close with this bullish candlestick. As for me, I will still enter the trade like that, but with proper risk management. You don't have to like at least enter the market with full margin every time, because you will clearly blow your trading account. So that's one thing that I wanted to mention. On this next example, example 9, we have 3 levels of sell limit. We can see that price came to the zone, close with the bearish candlestick here, and then the first level is on the area where we have drawn our supply zone. We have this sell limit order, and then we have this sell limit on the confirmation candlestick open, and then we have the other one on this side, on this high of this candlestick here, like this. It's like this. We have a candlestick like this, and then we have this. This is a bearish candlestick here. This is the sell limit line sell limit, even on the open sell limit, and then even on the confirmation candlestick we can still use the open. That is why I say we have 3 levels of sell limit orders. I know I'm going so fast on these examples, but we have to at least like cover most of the things. And then let's see this example here. We have this fair value gap here, and then we see price traded below this demand zone. Also, someone could have entered using this one for the market to shoot to the upside, but then price traded below this zone. Even if your buy limit order will be around here, that means it will be triggered and then your stop loss will be hit right away. But would you still enter with proper risk management? Yes, I will. But let's see how the market behaved. See, not everything in trading is 100%, not everything. You just have to use proper risk management so that you can manage your funds properly. We have a trade set up around this area. You can see that we have a zone, we have a confirmation candlestick, then you put your buy limit order here, then this next candlestick triggered the entry, stop loss will be here, and then you take this win here. That's how it is. It's very simple, but you have to put some time and effort. Let's move on to the next example. We have this next example, example 11. We have price, we have this fair value gap here, and then we have another one, fair value gap, and then we have another one here, fair value gap, but here price already closed it, here price already closed it, here price already closed it. And you can also see that price was very impulsive to the downside. Here the market is just correcting, but then let's look at how price behaved. Boom, you are in a loss again. So you see, everything in trading will never be 100% correct, even though your analysis was on point based on your price action or whatsoever. You will always lose one of those trades. That's one thing that I wanted to mention. Let's move on to example 12.1 using the higher time frame. We have the 4 hours time frame here. We have this high here was broken by this high, and then that means the zone will start. This is just like an internal structure. Okay, so from here that means the zone starts here, and then you can still try to refine it to this area. But then because we have this confirmation candlestick, this one is very difficult to trade for someone, but if you go and back test, this one will be much easier. You'll understand it properly. So then from here we have this open, we have this close around this area. That means we can still use this open and close of this bearish candlestick and this bullish candlestick from the higher time frame to the lower time frame, so that we can enter the market with low risk. So from here we can clearly see that we have in the lower time frame we have this low, we have this demand zone, and then price was here. So that means we can still try to enter because price test the zone and close with a bullish candlestick. Let's see how the market behaves. Your stop loss will be around here, maybe your first target will be here, and the higher target will be the higher time frame target for those who are willing to hold trades, because some of you don't even hold trades. Let's see how the market behaved. Okay, you see, proper stuff. You enter around this area and then you gain this much. Your stop loss is here. Only if you are using higher time frame to the lower time frame, and by using the 4 hours we can use the 50 minutes going lower. So let's move forward with the next example. We have the zone starts here, remember, or here start. We have a minor fair value gap around this area, fair value gap, but this one was closed. This is the area of the stop loss. We have a confirmation candlestick. Let's see right now you see a bearish candlestick, so meaning around this area this is where you'll be looking to go long only. Because we are still on the 4 hours, let's move on to the lower time frame and see what happened. You can clearly see that the market was around this area here. So would you enter your trade here, entry, and then put your stop loss here? You can still do it, and then once you enter the market was shooting to the upside. It never gave you a chance of being in a drawdown, and then you can still put your stop loss around here and then wait for the market to shoot to the upside. Even though you don't understand it clearly, this area, you can still see that we have the zone around here, but the first one did not work, and we still have the second one here. You can still enter the market here and then put your SL here on this low or low here. This one is just a confirmation candlestick. Okay, that's all that I wanted to cover from this video. So if you don't understand anything, guys, please contact me and you will find this free PDF only if you subscribe to the channel, and also contact me. I'll send it for you for free. Okay, this is just a free PDF for you to study, because I believe I was fast on this video, but I hope you have enjoyed this video. Please give this video a like and thumbs up, and also share it with your friends and family. See you on the next one.